Hello, I'm John Cunningham. Welcome to the RedChip Money Report. For those of you new to the show, RedChip is an investor relations, media, and research firm focused on emerging growth companies. Our unique platform combines global multimedia with traditional investor relations, reaching investors around the world. Now, today's show features interviews with executives of two public companies. First, Piedmont Lithium, stock symbol PLL on the NASDAQ. Piedmont Lithium is developing a world-class domestic lithium project outside of Charlotte, North Carolina, which is an area that historically provided most of the Western world's lithium between the 1950s and the 1980s. Demand for lithium is expected to soar as the electric vehicle market expands in coming years. Later, you'll learn more about why Piedmont is positioned to win in this exciting market. The next company featured is MYnd Analytics, stock symbol MYnd on the NASDAQ. MYnd Analytics uses predictive analytics to help physicians provide more personalized mental health care to patients while reducing trial and error treatment decisions. You'll learn more about the benefits of this innovative, patented technology in an interview with the chairman of MYnd Analytics later in the show. Now, before we get to our first interview, our quote of the week. It comes from the book Small Stocks, Big Money. Small caps outperform not because of market capitalization alone, but because the stocks in this category are least efficiently priced. This quote comes from Small Stocks, Big Money, a book with exclusive interviews with some of the biggest players in the microcap space. The book is available on our website and at Amazon.com. Now let's get to our first interview today. It's with Piedmont Lithium. Their stock symbol is PLL on the NASDAQ.
Keith, thanks for being with us today.
Dave, it's great to be here. Thank you.
Now, you're developing a lithium project in North Carolina. Give us an overview of where you are in the development process and what major milestones you expect over the next 12 to 18 months.
Sure. Well, we started this business about 3 years ago in Gaston County, North Carolina, about 30 miles west of Charlotte. It's a mining-friendly area. North Carolina is the number 7 mining state in the country. We're operating in what's known as the Carolina Tin Spodumene Belt. Spodumene is the mineral that contains lithium. Virtually all the world's lithium came from this region from the 1950s to the 1980s. There were 2 very large mines operating then. There are 2 large chemical plants still processing in the region. We've been aggressively building out a land package, doing exploration drilling, and putting economic analysis around the project. So 2019 is actually a very important year. We have a series of important catalysts. So in June, we'll update our resources. In July, we'll update our scoping study, which will be a summary of our economics. We hope our resource base grows materially and the economics, which are already very strong, will be that much stronger. And then toward the end of the year, we expect to complete the permitting process and complete a definitive feasibility study. So we should have a shovel-ready project right around the end of this year, which is moving very, very smoothly for us.
And as I understand it, it's the only conventional lithium project in the U.S.
Yeah, there are a number of projects across the country that are interesting. There are a number of projects really around the world. Some of the projects in Nevada, for instance, and some other states I think are quite intriguing. But ours is quite straightforward, really going back to the future, as we say, doing what was done in the region decades ago, simple open pit quarrying and processing, and then straightforward lithium chemical processing, which has been done around the world. So there's nothing novel about our process. It's really quite straightforward and from an execution risk perspective, quite manageable.
Keith, what's the essential value proposition? Why should investors take an interest in Piedmont Lithium today?
It's a great question, and there's really a handful of things. First of all, demand for lithium is growing very dramatically, 20% plus a year for the next decade or two, people are saying, really driven by electric vehicle demand. So lithium is the essential element in a lithium-ion battery. You have batteries in your cell phone and your laptop and your tablet, but really there are big batteries in Teslas and other electric vehicles. That's a booming business. We're currently at 2% electric vehicle penetration around the world. Many people think we'll get to 10% around 2025, so that's a quintupling in the next 6 or 7 years. And then that's just really the beginning. So lithium demand is exploding. We are in North Carolina with a large, very low-cost conventional project, which we think we can get on track in the reasonably near future. And we think the economics are fantastic. We are NASDAQ listed, so there are dozens of lithium companies around the world. There are only 2 juniors listed in the United States. We're one of them, so it's very accessible for American investors. And we think we're at a point where our valuation, well, it's disappointing to us. It's a great opportunity for investors. The economics of the project are not yet fully reflected in the stock. We think that will change as we hit our catalyst this year. It should be a very exciting, newsworthy year, and we think investors should benefit from that.
Well, talk to us about your business model. I think you said you would go into production sometime in 2020. What does that model look like?
We're contemplating a two-phase development. So in phase one, around the end of the year, we hope to begin construction of the mine and concentrate plant to produce a lithium concentrate, which was done historically in the region. That's a $130 million capital expenditure to drive very strong economics. Our model projects $80 million a year of EBITDA from that business. We'll then, with that cash and cash flow, finance the chemical plant, which will produce lithium hydroxide, which is the chemical that goes into batteries for people like Tesla and many others. So it's a very fast-growing market. We can be a very low-cost producer of hydroxide. That will come on stream a couple years later. And then we'll be an integrated specialty chemicals producer based in North Carolina with, based on our models, $235 million of steady-state EBITDA. The longer we can have that EBITDA run, the more value we have, obviously, in our stock. And we're very focused right now on expanding our land package, expanding our mineral resources to enable a longer project life.
I'll also note, Keith, that there are 4 analysts covering your company, all with price targets significantly higher than when you are trading today. And you can see some of those price targets on the screen. How big is the market opportunity in dollars?
It's a great question. It's really very dramatic. So I'll answer that a couple different ways. First of all, there's about 280,000 tons a year of lithium production currently in the world, about 60% or so of which is used for batteries. The battery side of that equation is growing dramatically. So we're expected to get to 1 million tons by 2025, roughly a quadrupling. And that's really, again, to get to 10% EV penetration. So the market will grow far bigger than that. Currently, only 1% of the lithium raw material in the world comes from the United States. If we were in production today at our 22,700 ton projected level, we'd be about 7 or 8% of the global market. So it's a big business. We'd be by far the biggest American producer. We do think eventually, as every car company moves aggressively into electrification, and they all are doing that, people like Volkswagen are going to build electric cars in Chattanooga. People like BMW will build electric cars in Spartanburg, obviously in South Carolina, obviously Tesla and Ford, GM, et cetera. So auto companies like to have local suppliers where they can. They're pretty soon going to have a large, low-cost regional supplier in North Carolina, which we think they'll find very attractive.
And to recap, what's the main takeaway for investors? And I will note for our viewers that companies in your space trade at a multiple of their forward EBITDA, about 2 times their forward EBITDA. And of course, at your current market cap as of this recording, a little less than 80 million, we might want to reiterate your EBITDA going forward as you talk about the main takeaway for investors today.
Sure. So our market cap today is around $75 million US dollars. I think that is a attractive valuation from an investor's perspective, certainly. We have a construction decision on our project 9 months away, we hope, by which time the project will be bigger. The economics, the net present value will be significantly larger. It's currently $888 million in our existing scoping study. To the extent we can grow resources and extend mine life, that number should grow. And again, we contemplate $235 million of annual run rate EBITDA. Trading at $75 million today, we're at a fraction of our valuation we might ascribe to in the future. So we think it's a very attractive opportunity today.
Keith, thank you so much for being with us today.
Thanks a lot, Dave. Enjoyed it.
Now, to get more information about Piedmont Lithium, visit pllinfo.com. You'll see research reports, fact sheets, presentations, and the latest videos. Now, it's all free, and you can even subscribe to email alerts to stay on top of the latest news. You can also call 1-800-RedChip to speak to a specialist if you have any questions. Now let's get to our second interview today. It's with MYnd Analytics, stock symbol MYnd on the NASDAQ.
Robin, thanks for being with us today.
Thanks for having me. It's great to see you.
Now, MYnd Analytics has combined telemedicine and artificial intelligence to deliver personalized behavioral health treatment plans. Give us an overview of your technology.
So we do 2 things. We improve access to care, and we have tools for physicians to help determine what medication might be effective in the person in the behavioral health area. So it's using artificial intelligence to determine, based on EEG waves, the patterns of many thousands of patients to determine what medication will work in that person's brain.
As I understand it, there's been over 40 studies conducted on your technology from a lot of Ivy League schools, so give us a little history.
Yeah, so I look at this very similar to what we all know in cancer. Not all breast cancers are alike. There are markers, the BRCA gene, in lung cancer. So we have to look for ways to determine the subtypes of a disease so that we can better determine how to treat a patient. And now what we've learned with many independent studies of KOLs, the EMBARK trial, which was the recent NIH-funded trial, is that EEG is a good predictive marker of diseases in behavioral health like depression, and that by using the patterns, we each have different EEG patterns, and by using those patterns and following people out with their outcomes to different medications, we can determine how your brain will respond to a particular medication. And that helps give a tool to physicians when they go to treat you to understand better what classes may work for your brain based on those patterns and specifically what drugs in those classes.
Robin, what's the essential value proposition for investors today? And you can talk about the recent merger you announced with MYnd Life Sciences in this as you answer the question.
There's a couple of trends now that are very important, I think, in medicine. One is moving toward value-based medicine. How do you improve access to care, improve quality, and lower costs? And behavioral health is an area that's a very large focus because about 25% of people in their lifetime will have a behavioral health condition. There are many out there. So how do you help individuals get access to care? And we do that through telemedicine. And then how do we give tools to the primary care physicians, the doctors who were really frontline before they even get to a psychiatrist, to help them have tools to determine objectively what the right medications will be. So really we use AI. We have telemedicine, which is a growing space now to improve access to care. And it's a time where we're able to look to maximize shareholder value through a recent acquisition that we announced. We signed a definitive agreement to bring a commercial company with a biotechnology company in sickle cell disease, where they just started to commercialize their product. And in this merger transaction and then the spinoff of the MYnd business and the Arcadia telemedicine business, our investors will be able to have what I call 2 bites of the apple: ownership in the new company, MYnd, as well as they'll hold all the ownership in the MYnd and Arcadia business.
And so the acquisition is a company that has a drug approved for sickle cell anemia, as I understand it. And if you look at some of the comps in that space, you're seeing $1 billion plus market cap. So they would keep 6% of that company that you acquired while also owning MYnd Analytics, correct?
Yes. So we will hold 5.9% of the merged companies for our shareholders. And of course, I can't give guidance, but you're right. It's a company that has first mover advantage. It was one of the first approved drugs for sickle cell in a very long time. And it's an area of focus now where people are looking for ways to prevent those sickle cell crises and people coming into the ER and coming back to the doctor. So the therapy that they have is exciting. They started to commercialize, and now how do they expand? And what's important to realize is while there's only 100,000 cases in the United States, there's over 20 million people worldwide that have sickle cell. So the opportunity isn't just in the United States, but globally. And hopefully, once we have the merger, we'll continue to see progress in their expansion throughout the world.
Apart from the acquisition of MYnd Life Sciences, let's go back to the telemedicine and the behavioral health technology. How big is the market opportunity?
In general, it's tremendous. I mean, if you think about the fact that 25% of people will have a behavioral health issue, you can see that's a very large part of the population just in the United States alone. We're constantly seeing people saying this is an underserved population. I believe just yesterday we saw an executive order from Trump looking at veteran suicides to work together to use technology and reduce the suicides that occur at over 20 a day. Looking just at ER visits, 10% of those visits are people coming to the emergency room for behavioral health issues. Not necessarily from the treatment perspective, but the access. There's nowhere they can go to get help, so they go to the emergency room. So billions and billions of dollars is being spent in mental health diseases, and having more effective tools to improve that access to care, to reduce the trial and error prescribing should have a dramatic impact, not just on quality, but on overall cost.
And again, to clarify, so by giving the patient an EEG, your technology can determine which drug would best suit that person to treat their particular mental health problem. Is that correct?
Yeah, 17 million people in the United States have been on 2 medications and are what's called refractory. They're just not responding well to care. So it really is trial and error prescribing. And very often that makes people not come back to the physician, or under that treatment. They start self-medicating with alcohol, drug abuse. And it really is an area where we're just not serving properly or having a solution for the disease in a way that, trial and error prescribing just isn't working.
Robin, you have a program with the U.S. government. I'd like you to talk about that program. You also have a pilot program with Horizon in New Jersey. Could you comment on those 2 programs?
So, with the government, unless you're a provider inside, say, a VA, the way it works is you have to apply to be in the GSA. So what they do is they negotiate contracts with vendors. And now that there are these tools and technologies that are more IT related, we've been able to work on getting a contract. So it's a negotiated rate, 5-year contract, which can be renewed with the government, so that anyone in the mental health in the government area that's looking for technologies and services can go to their GSA and take and utilize those services on the negotiated rate. So now we have to take that information and let people know that we're on the GSA, that it's out there, and look for ways to drive revenues and get patients into that contract. So we're pretty excited about that, and that's very recent. And then over a year ago, we started a pilot program, a paid pilot program, with Horizon of New Jersey and Hackensack Meridian, and where we're working to utilize the tool, the peer report, with physicians. So half of the physicians will get the peer report and look at that tool to help determine what the right medication is for the patient. Half won't, and then we'll look at the differences in outcomes, not just from quality, but also cost. Because through the pharmacoeconomic studies that have been done, there's a 4.7 times savings for physicians if they utilize that tool. That's what this analysis that was done at Stanford showed. So now we want to show more real life that how this will occur in today's healthcare system. So we're really excited about that. And what's important there is there's about 2.8 or 2.7 million lives under the Horizon umbrella. And so 16% of those individuals will be on those kinds of medications for depression, anxiety, manic mania, eating disorders, etc. So that's the pool. And the question is, if this becomes a standard of care, what would that look like? So of a 2.7 or close to 3 million population, that's 600,000 people just in New Jersey. That's the population that we have that we could really focus on and help use our tools to improve the care, both in access and in quality, and make sure that they're on a medication that's most efficient and works best for them. So you can see that really plays out. We charge about $800 for the test in its entirety, including the EEG and the report. So that can grow very quickly when you go from a pilot to become standard of care. So that would be our hope for the future. And we'll continue to work with other payers to show them how this can be a benefit to their population of members that they insure.
Robin, to recap, what's the main takeaway for investors today? Why should they own your stock today?
I think the main takeaway is we have great technology, good intellectual property, and we now have telemedicine as well as this tool to reduce trial and error prescribing. And we are really behavioral health companies with tools that can have an impact to care. We have additional leadership that we brought on, who's a gentleman who's been focused on building businesses, understands, how innovation and tools can impact care, growing networks, and we're excited for him to bring these two businesses together, really drive the growth of the business. And also because we're able in this transaction with Emmaus to put that together, now is the time where if you're a shareholder and you hold that stock, till we close the transaction, which we're on track for to complete by the end of the first half of this year. You will get a piece of Emmaus as well as MYnd Analytics. So it's an opportunity to get 2 bites of the apple in 2 businesses, both with commercial products and that are generating revenue. So, often with drug development, there's always a risk there, but we're past that risk in that this is a revenue generating company. And same with MYnd Analytics. The clinical trials have been done. They're getting reimbursement. And now it's just about scale and, taking the opportunities out there and being successful.
Excellent. Robin, thanks for being with us today.
Oh, thank you so much for having us, and hopefully you'll continue to watch our progress.
Now, to get more information about MYnd Analytics, visit MYndAnalyticsInfo.com. You'll see research reports, fact sheets, presentations, and the latest videos. Now, it's all free, and you can even subscribe to email alerts to stay on top of the latest news. You can also call 1-800-RedChip to speak to a specialist if you have any questions. Now let's recap the 2 public companies we met with today. First, Piedmont Lithium, stock symbol PLL on the NASDAQ. Located near key end users, Piedmont is ideally positioned to become a leading domestic source of lithium to supply the accelerating adoption of electric vehicles and battery storage. Between multiple near-term catalysts and growing interest from Wall Street, the upside for Piedmont could be substantial. Learn more at pllinfo.com. Then MYnd Analytics, MYnd on the NASDAQ. MYnd provides a unique opportunity to pick up ownership in Emmaus and their sickle cell treatment, combined with the potential upside of MYnd's innovative behavioral health and telemedicine programs. Dawson James initiated coverage of the company in April with a price target of $4 per share. Visit MYndAnalyticsInfo.com to learn more. If you have questions about today's featured companies, call us at 1-800-RedChip to speak to a specialist today or visit our website at redchip.com. Remember, these stocks are for your speculative money. Gains can be significant, but you must be prepared for the downside. Clients on this show sometimes pay us in stock, and while you're buying, we may be selling. You can read our full disclosures at redchip.com. And if you know a public company looking for investor relations services, don't hesitate to give us a call at 1-800-RedChip or email us at info@redchip.com. We look forward to hearing from you. Thanks for being with me. I'll see you the same time next week.